Hello there. This is Bruce at Fleet Capital Management. It's Friday afternoon. Markets closed August 1st, 2025. Pretty bad day on the markets. I will go over that with you and show you what tactics we're going to use going forward. We always start by saying the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. I'm always available, Bruce at fleetcapitalmanagement.com. So I don't understand why this isn't in the news 24 hours a day, but I've been pounding the table on this for quite some time about the destruction to corporate earnings based on tariffs. This says that many large companies have faced significant earnings losses due to the tariffs in 2025, affecting both U.S. and international firms. Some of the findings: widespread corporate profit declines. Recent global research indicates that about 76% of US businesses have already experienced profit losses due to tariffs. I mean, this is amazing. This should be the headline story of every news report, in my opinion. Major corporations and whole sectors are reporting profit pressures as a direct result of these measures. Many companies planning price hikes. There's your inflation that I keep talking about, and cost cutting. General Motors reported $1.1 billion loss attributed specifically to tariffs in their recent quarter, resulting in a drop of net margins from 9 to 6%. Major oil companies like Chevron and ExxonMobil reported sharp profit drops in second quarter earnings, mostly because of tariffs. Amazon shares dropped nearly 8% in pre-market trading after it issued profit warnings for the year, citing increased expenses, of which tariffs are a documented headwind. Um, we'll go on. Ford, just a few days ago, announced a decrease in earnings due to tariffs. The company revealed that second quarter 2025 adjusted earnings per share fell 21.3% year over year, explicitly citing $800 million in net tariff costs for the quarter. The company directly attributed its anticipated profit decline, potentially as much as 36% this year, primarily due to rising tariff expense. Ford has officially blamed tariffs for its profit slump in 2025, providing detailed estimates of the negative financial impact and lowering of corporate earnings on an outlook. I don't know why this is not front page news. I do not know why this isn't the lead story. Every time the news comes on, tariffs are horrible. The last time tariffs were used like this were a primary cause of the Great Depression. Just look up the Smoot-Hawley Act if you want to learn about that. This is insane, and this is what we're living with. On a more of a bigger basis, Wall Street is observing a marked deceleration in overall S&P profit growth, with consensus forecast, excuse me, suggesting that company profit margins are under sustained downward pressure, partly due to tariffs. For example, Goldman Sachs estimates S&P 500 companies' earnings per share growth slowed from 12% to 4%. 12% to 4%. Unbelievable year over year. But I don't want to miss something. Back here, it talked about that they will be raising, there it is, price hikes due to these tariffs. These big companies can't just absorb all of these tariffs. There has to be price hikes, and there will be. Excuse me, I still have that cough. Amazon has explained that anything you buy on Amazon is going to cost more. Costco has explained that they have to raise prices. Walmart has explained that they have to raise their prices. And this is not political. Walmart CEOs are all Trump supporters. Amazon CEO is a Trump supporter. Major oil company CEOs are Trump supporters. Ford was one of the biggest Trump supporters. So this is not political. Get over that. This is economic business 101. Now, this is a problem. We have not seen inflation register the price hikes yet. We're starting to see it, but I don't think we're going to see it until August, September, probably September. It takes time for these things to filter through the economy and show up on those reports. But mark my words, we're going to pay more for things. And Mazda had a commercial on TV the other night that basically said, and I love Mazda, I think it's a fantastic company. They said, come buy your Mazda now because the cars we have on the ground, we have not increased their prices due to tariffs, but the new ones coming in will. So if you don't think that tariffs cause inflation, I don't know what else to tell you. I just don't know. And if you don't believe that tariffs cause inflict horrible pain on corporate America, I don't know what to tell you. And the reason it's so frustrating is I was on a call with someone just the other day who's an otherwise extremely intelligent trader, and he made a statement off. He said it's awesome that these tariffs are working. I don't get it. I don't get it. I just don't get it. Now, let's also talk about seasonality. Today is August 1st. Don't worry about this highlight here. That doesn't mean anything. But this is seasonality on the S&P 500. And seasonality is a real average. It's something, it's just one more data point. You don't hang your hat on it, but August and September are usually pretty lousy months. August is positive 6 out of 10 years. September is positive 4 out of 10 years. The average rate of return for the S&P in August has been 0.2%. The average rate of return in September has been negative 2.2%. Now, let's just look at this for a second. I mean, this would lead you to believe that you should never invest in September. That might be true. Last year, it was up 1.8%. 2019, it was up 1.5%. 2017, it was up 1.5%. For the August month, it's pretty lousy, but 24 was up 2.3%. Pretty extraordinary. That's a great rate of return for a month. Are you kidding? Look at this. In 2021, it was up 3%. And now we're coming out of COVID, granted. 2020 was up 7%, 2018 up 3%. So my point is, this is not an end all. This is a data point. But you can pretty clearly see, even just by eyeballing the chart, that things start to fall apart in August and September. I'll tell you that the first half of October is usually lousy, and then the second half really picks up, and December can go either way. So the point of all of this today so far is it feels like we've had a tailwind and now we have a headwind. And we need to be aware of that, and we need to make some minor adjustments for that. And I'll show you what we're going to do. Because the most important thing to know is whether the market's going up or down. Everything follows from there. So here's our matrix. This is updated through today. And on the short term, we've gone back to down, down. Weekly still shows up, up, but it's really close to flipping. In our daily moving averages, we like to see the 3-day above the 20-day, above the 50-day. Well, the 20 is now above the 3, and we consider that a pullback. Pullback is not a big deal. If Monday this market rallies back up, well, then it was just a pullback. But you have to go through a pullback before you can get to a correction. And hopefully we won't fall into a correction. A correction is when the 20 is then below the 50. I'll show you this on the charts. We are not in a bear market. Our bear market's avoidance indicator is still clearly up. The 10-week is above the 20-week. This was big. VIX, which is the fear index, went through the roof today. It went from below 15, which is extraordinarily positive, to over 20, which is the red area. And why did this happen? Tariffs. Trump announced new tariffs. I guess he doesn't like Canada anymore, our best trading partner forever. That's why this is happening. This is not a mystery. This is not This is because of Trump. It's the only reason that all of this is happening. Here's the S&P. The daily is on the left. You can see that 3-day white moving average crossed below the 20-day moving average. And that is a pullback. The 20 is still above the 50, clearly above the 50. So we're doing fine. We're just in a little pullback unless things change, but volume has turned negative on the daily um, in both those studies that I use. The RSI has dropped down below 50. So it's not looking great on a very short term. On a longer term, which is more important, it's always more important. This is the weekly chart. We can see that we kind of are fine. We're right in the middle of the linear regression. The 10-week moving average is above the 20-week clearly. That is our bear market avoidance indicator. And even my short-term trading, which is a 2-week moving average, is still above the 10. That's good. We've got really good momentum, but the red means it's starting to weaken. The RSI was last week I told you it was a little bit overbought, and we can see that it crossed back down. It's still not below the 50. So on the weekly, we don't look terrible. I just want you to know that. For our volume indicators, there's still green and they're still above this dotted line, which means there's enough volume to move price. And on the MACD, yes, we are losing some momentum, just like it suggests up here, but we're still clearly above the zero line. When we go below the zero line is when we anticipate problems to happen. You can see back here, we went below the zero line and the market kind of went nowhere, went up a little bit, but eventually it kind of rolled over. So we don't want to see the MACD below the zero line. So the bottom line from all of this is that on a weekly, we don't look bad. We had a really bad day. But on the weekly, we still look okay. So we'll see what happens on Monday. But we just need to be aware of these headwinds. That's the most important thing. Today, the market's really sold off. VIX jumped up huge. The only things that did well for us, gold did real well for us. It was up 2%. Silver was up a little less than 1%. One of our stocks was up a smidge, 0.09, but I'll take that when the market's down 160 to 2%. Um, Gold does well in an inflationary environment. Gold does well when there is uncertainty in the economy, and God knows there's uncertainty in the economy all over the world because of one person. ETH took a big drop. This is Ethernet. This is a very volatile security, so I'm not surprised. It can turn around and go up 10% in one day too. Both ETH and Bitcoin were down today, which was a little interesting. But we'll keep an eye on those. And what we will do, let me go to CLS. CLS is currently our biggest winner. I think we're up 100 and let me see. Bear with me and I'll see what we're up here. Let's go to my stock portfolio. We're still up 106% on CLS. But what I'm doing is I have my alert stop here. Now we're way over the linear regression, so we would expect a pullback. Let me put the linear regression on the daily and see what that looks like. Yeah, we're way above the linear regression. So I'm expecting a pullback. I don't know how deep the pullback will go, but I've got an alert stop not far from where we are. And if this price continues down and hits that alert, there's a good chance that I'm going to sell this. I'm just going to sell it so we can capture our profit. And what I'm assuming, if it does, is that it may drop more significantly. Doesn't mean we wouldn't continue to be in an upward trend, but I'd rather us avoid this and then buy back in when it's ready to run again. So I'm doing this on all of our stocks. Excelsius, it's almost at our alert. It's like within a penny. So we'll see what happens on Monday. MELI, here's my alert right down here below the 20-week moving average. We'll see what happens. My point is we're not going to give back all the profits that we have. That's foolishness. We are going to manage this properly. If the price comes down below this 20-week moving average, which is in red, we're probably going to sell it. And I have that for all of our stocks and all of our ETFs, and I adjust these every single day after the market closes. So if next week continues this downdraft in the overall market, and I don't know that it will from day to day or week to week, but if it does, we are potentially going to get stopped out of some of our investments, and that money goes into cash, into your money market inside your account, and then we will pay close attention and look for new entry points. This is normal. This is what happens August, September. And again, we'll manage it well, we'll protect profits, and we will look for new opportunities as we go forward. So that's what's happening. I didn't mean to be a Debbie Downer for this meeting, but it just galls me that people aren't talking about tariffs the way they should be talked about. There is nothing good about tariffs. The people who think there's something good say, yeah, but we're going to pay off our national debt with tariffs. Great. We'll have no national debt and we'll have no trading partners anywhere in the world. It makes no sense. It's not economically sound. So there's my rant on tariffs. Sorry about that. Have a great weekend. And if you have any questions or concerns, you know I'm always available. You can hop on, shoot me an email, or you can click this little button here, see my schedule, and hop on a Zoom call, and we'll talk one-on-one. But other than that, have a terrific weekend. I'm watching this stuff. I'll take care of it, and I will be back at this early Monday morning. Talk to you then. Bye-bye.